18,091 on the Nifty.
Close to about 150 points on the Nifty.
Nifty as well has come off from the highs of the day, still maintaining above that 18,100 mark.
It could have been a lot better, I think one has to say that, because at about 18,100, I think the market is showing some signs of hesitation.
The Nifty ends at around the 18,150 odd mark. The Nifty Bank came off 400 points from the high point of the day, but the mid-cap index ended with a gain of around 0.8% and more number of stocks advancing in comparison to the number of stocks that are declining.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. The Lal Street hits the highest level in 10 months. Sensex reclaims 61,000 and Nifty gains 130 points despite a decline across bank stocks. Tata Steel slips in a weak show with slimmer margins and expectations of a softer second half for its European business. Pharma delivers in Q2, soars 2% despite weakness from Taro. Healthcare stocks rally between 1 and 6% as revenues are expected to only grow. Nykaa soars 3% after a decent set in the second quarter. Delivery rallies 10% after months of a sell-off. Auto companies report a mixed bag in October, while robust passenger vehicle and EV sales power Tata Motors. CV maker Ashok Leyland and tractor maker Escorts sees strong sales. Bajaj Auto continues to report weakness in exports. Okay, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Gautam Shah, the founder and chief strategist of Goldilocks Premium Research. And in Big Corporate Voices, we have R. Shankar Raman, who's the whole-time director and CFO of L&T, and Rakesh Sharma, the executive director at Bajaj Auto. Okay, all right, with that, we'll start with the day's trading action now. The Lal Street hit the highest level in 10 months as the bulls maintained the winning momentum. Sensex gained nearly 400 points and the Nifty gained over 100 points. All this despite a decline in bank stocks. Prashant Nair is here with the market wrap. Prashant.
Well, it was a pretty good session for the market. The index cruising closer and closer to that all-time high level. There was some hesitation mid-session at about 18,100, which I guess was the most traded sort of price point on the Nifty today. But by close, we sort of moved higher once again, almost at about 30 points short of the day's high. Banks underperformed. PSU banks had done very well. That pulled back. Private banks also lower. Axis and PNB, just to give you an example, one from the private space, one from the PSU bank space, which saw profit booking today. What was higher? Metals as a pack moved higher. We had pharmaceutical names and the government companies, the CPSE index, which did very, very well. A bunch of names. So on the Nifty, old economy names were all the rage. NTPC, Power Grid, Grasim, Divi's Laboratories was something which did well. And Adani Group stocks are back in focus. So Adani Enterprises and Ports both did quite well as part of the Nifty. The broader gains and advances outnumbered declines, not by a huge margin, but comfortably so. Varun Beverages, Adani Wilmar, NMDC, Renuka Sugars, CMS Info, Godfrey Phillips. Delivery was locked up 10%, and Circuit, after, of course, what has been a very damaging fall. Heidelberg Cements, JK Lakshmi, and something like a Gokuldas Exports doing very well as well. I mean, as of today's close, the Nifty is just 2.5% away from its previous all-time high of 18,604, which was made in October of 2021. So we're almost there. I mean, between now and then, you've got two things. You've got the ISM manufacturing survey out of the US tonight, and then you've got the Fed decision, which comes out tomorrow night, to which markets here will react on Thursday morning. A 75 basis point is priced in, but any talk that the pace of hikes will slow down from here, I think could propel the next move for markets. Back to you.
All right. Okay, Prashant, thank you so much for bringing that market update for us. Let's get you some market opinion now. We have Gautam Shah, founder and chief strategist at Goldilocks Premium Research, who said that he expects the market to face resistance at 18,100 levels. He added that he is betting big on banks, autos and capital goods. Take a look.
Well, this kissing distance hasn't been going so well for the last 6 months because we've attempted to get past this 18,000, 18,100 area multiple times, but we've always found some resistance. In fact, the market has topped out around this level a couple of times this year. Indian markets At this point, the fact that since there are no topping out signs, the leadership has returned, VIX has collapsed, seasonally we are in a very positive period, banks have started to do well. I think there are just too many factors which suggest that this attempt should take the Nifty past 18,100, which has been the big resistance. And once that gets confirmed on a closing basis, we should see new lifetime highs past 18,600. Clearly, it's all about the banks. I think the kind of outperformance that it's seen in the recent past and the fact that it's just 1.5% away from lifetime high tells me that banks are going to lead the way even from here. So our working target near term would be about 41,800, which was the previous high. I think in this attempt, we will get past that number. And once that confirmation comes, we should see 43,000 to 43,500. Apart from the usual poster boys, which is ICICI Bank and SBI and maybe a Canara and BOB, I think some of the other underperformers are also attempting a comeback. So I would still be very, very positive on banks, followed by autos and capital goods.
Okay, all right. That is some expert opinion coming in. Let's move on to the second headline now. Tata Steel fell 0.25% after the company reported a weak set in the second quarter. Slimmer margins and expectations of a softer second half for its European business weighed on sentiment as well. Nigel D'Souza is here with all those details. Nigel.
Well, that's right. Tata Steel's numbers were a miss. The consolidated EBITDA didn't miss estimates as well as the margins. For Tata Steel, we look at the geographic breakup. And for the India business, well, the number came in, the EBITDA per ton came in at sub 9,000 rupees per ton, which was a miss in comparison to the 11,000 rupees odd that we were working with. European business more or less in line at around $115 per ton. Two big reasons for the miss. One was that steel prices were weaker. The second factor was that input costs remained elevated and they didn't get benefit of lower input costs, which could flow through in the coming quarters. The net debt as well ballooned up by close to 17,000 crores, primarily because of the NILL acquisition, the capex that they spent, and also they paid out dividend. Now, I spoke to the management on the call, and in fact, they gave us two big takeaways. One is coking coal costs will be lower by around $90 to around $100 per ton for the India and Europe business, which will be some bit of relief. And the second factor, they admitted that yes, the European business will struggle a little bit in the second half of the year, and the EBITDA will be low in the second half in comparison to the first half of the year, though it will not move into the negative terrain. CLSA, well, they downgraded the stock. They cut the target price as well as cut the EBITDA estimates. They expect the India business margins to improve, though they see some risk to Indian steel prices because it's trading at a premium in comparison to imported steel. While on the European business, they say that there could be meaningful downside to that business.
Most of the coking coal we used was coking coal that we had bought in the previous quarter. So we really did not get any benefit on an average. Of course, the coking coal consumption cost in September was lower than July. But July and August, it was actually moving upwards rather than downwards. So we'll start seeing the benefit in Q3. Europe may be about $100. India would be about $90. The second half for Europe will not be as good as the first half. That is clear. Simply because the rising energy costs would have an impact, though over the last 3 weeks, as you would know, the gas prices have dropped very significantly. So maybe Q4 will not be as bad as we thought it would be. No, not negative. It won't be negative, but let's see where it is.
Okay, all right. That is the word coming in from Tata Steel management. Moving on to the third headline today. Sun Pharma gained over 2% after the company reported a good set in the second quarter, despite the weakness that it saw from Taro. Ekta Batra is here with all those details. Ekta.
Well, yes, for Sun Pharma this quarter, it was largely an operating beat that they reported. So the revenue was up around 14% The street was anticipating around a 13% growth. Margins came in at around 27% versus expectations of around 26%. And the better operating performance along with the lower tax rate really aided the profit this quarter, which was higher than expectations. Now, the global specialty sales were up around 25% plus. So that continued its momentum from the previous quarter. And was one of the key drivers of the numbers this time round, simply because Taro had disappointed a couple of days ago. The Taro disappointment probably reflected in the total US sales they reported this quarter, which came in at around $412 million versus expectations of around $420 million. Remember that Taro reported $130 million in terms of sales versus expectations of $160 million. Lastly, India was up around 8.5%. The street was expecting around double-digit growth this time, 14 to 15%. So maybe that was a little bit of a disappointment. But overall, steady, strong quarter coming in for Sun Pharma, especially on the operating level.
Well, that is about Sun Pharma, but Ekta, stay with us because healthcare and hospital stocks, they have been buzzing in trade. What's helping here? What's happening?
Well, yes, the healthcare delivery stocks were buzzing in today's trading session. The diagnostic companies such as Dr. Lal's as well as Metropolis were higher. Both the stocks, for example, are still to report their numbers. They both will be releasing numbers on the 8th of November. The street will be watching for the base business performance on a Q-on-Q basis, which is basically the non-COVID-19 revenue for a lot of the diagnostic companies, considering that COVID-19 revenues are now out of the system nearly, and what kind of competition we are seeing in the diagnostic space could have in terms of an impact on the non-COVID business as well as the margins for these companies. Separately, hospital stocks have been in focus, buzzing around. A lot of the companies, in fact, are still to release their numbers. The likes of Narayana, Max at fresh 52-week highs within the hospital space. Now, in terms of hospitals, the street will be watching for momentum, which started last quarter in terms of the electives, surgeries increasing post-COVID, and hence the occupancies as well as the average revenue per bed increasing for a lot of these companies. International patient inflow is also expected to rise as compared to the previous quarter, and that is expected to aid the overall earnings this time round.
Okay, all right, Ekta, thank you so much for bringing us all of those details. Moving on, Global Health, which operates Medanta Hospitals, will launch its IPO on November 3rd to raise around 2,205 crore rupees. The IPO consists of a fresh issue aggregating to 500 crore rupees and an offer for sale of nearly 5.08 crore equity shares by promoters. The company's CEO, Pankaj Sahani, said that Carlyle would be making a complete exit with the IPO. He added that the company plans to strengthen its balance sheet with this IPO. Listen in.
Out of the total funds which we receive, the company will be taking 500 crores in its primary, and the remaining will be the offer for sale, which is largely the Carlyle Group, which owns about 20% of the stake, and they will be exiting through the process of the IPO. From the 500 crores that the company raises, about 375 crores will be used for repayment of loans. These are primarily loans which we had taken for our projects in Lucknow and Patna, and that will allow us to further firm up our balance sheet. We already have a fairly strong balance sheet, but this will give us a further cushion and also allow us to be able to optimize on our financing costs and set us up for the growth that we see coming in the future.
Okay, all right, that's the word coming in from Medanta. But with that, we'll slip into a short break now. Stay tuned, we'll be back in a bit with all the other headlines. Welcome back. You're still tuned into Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. Nykaa gained close to 3% after the company posted a decent set in the second quarter. Mangala Malu is here with the details. Mangala.
Nykaa reported a rather decent set of numbers in their second quarter. If you just take a look at it, their revenues grew by around 7% quarter-on-quarter in what is a seasonally weak quarter. But the key, positive from the numbers was a 33% jump that we saw on their EBITDA, which meant that the margins have expanded by about 100 basis points quarter-on-quarter. Importantly, the net profit on an optical basis is lower, but that's primarily on account of higher depreciation, finance costs, tax, and lower other income. The key thing to watch out for will be what the management has to say with regards to improvement in their performance in the third quarter, which is a seasonally strong quarter for Nykaa.
Okay, Manglam, thank you so much for joining us with all those details. So that is about Nykaa, but tell us more about delivery. So 10%, what is happening here?
Well, there are a bunch of reasons why delivery could be higher in today's trading session. The biggest reason is the kind of drubbing that we've seen in all these stocks. So in fact, in the last 1 month itself, the stock is down almost 35%. From its post-listing highs, it's down 46%. And from its issue price of 487 as well, it's down around 22%. The key reasons for the big sell-off that we saw, it started off when the company reported its second quarter update, which suggested weakness in sentiments as well as volumes. And the fact that their capex took longer than expected to stabilize. And the street was worried about the integration of the B2B acquisition that they made of Spot On. But importantly, now the street is fearing that there could be a fair amount of supply coming in on November 19th as the pre-IPO lock-in ends as well. But recently, we've seen a pop from the lows in a lot of these new age companies. So case in point, in the last couple of trading sessions, Nykaa is up 23%, Cartrade is up 20% from the lows. And why just that? We saw a big fall in names like Paytm, Zomato as well. Zomato itself is up 55% from the lows. So that is something that we'll have to watch out for. Nykaa reported its second quarter numbers today, and they weren't very bad. In fact, now the street is expecting that there could be some pickup in the third quarter on account of festive season, and Delivery's second quarter numbers are on November 11th itself. So those are a couple of things that the street will be tuned into. But the key reason why it may be up is because of the big drubbing that it has seen, and maybe someone is finding value here.
Oh yes, 10% higher in Delivery today. But moving on, the fifth headline today, L&T ended the day flat after the company posted a good set in the second quarter with a robust order inflow. Vivek Iyer is here with all those details. Vivek.
Well, that's right. So L&T, very good quarter. Company, in fact, has indicated that they managed to meet the higher end of the targeted inflow band of 12 to 15%. The only sore spot as far as the numbers were concerned was the core EPC margin, which the company attributed to a weaker product mix, a project mix, also on the back of very volatile commodity prices. A couple of key highlights from our conversation with them. First is, as far as an update on the road projects is concerned, the company would be selling the entire road projects business in this particular quarter. They expect to complete the sale by end of FY23. When it comes to the Hyderabad Metro, analysts were expecting that too would happen soon. However, the management has indicated that the first priority there would be to reduce the debt as far as the Hyderabad Metro is concerned, improve the operational metrics, and they probably pushed it out a couple of years. When you're talking about the ROE guidance, very importantly, the management has indicated that they are looking to increase ROE by 1 to 1.5% on an annual basis in the next couple of years, and that is something that a lot of analysts will take a lot of heart from. When it comes to brokerages are largely positive on the number. CLSA says that margins are likely to improve from fourth quarter FY23 from lower commodity prices. HSBC says that the divestment of ROE dilutive businesses is something that augurs quite well for the company going forward.
Assets are in form of the stake in IDPL, because the IDPL is a subsidiary that is actually holding all these assets. Every asset is unique, so it has its own discrete cash flow. Being a very price-sensitive information, before the document is inked, I am not authorized to announce the value. But suffice to say that we are getting a fair value for the assets that we are exiting. We are into the documentation discussion phase, so I expect by the time this calendar year is out, we would have inked the document. Like anything else, I think we need a hell a lot of approvals from various authorities. So that is going to take 3 to 4 months for getting the various NOCs. At the beginning of the year, we told ourselves that we need to have 30 basis points improvement over the reported margin of the previous year, which was 9.2%. So we were shooting at 9.5%. We didn't anticipate the supply chain to stay broken and the war to continue the way it has been so far. So to that extent, I think there has been some headwinds in terms of the supply chain getting back to order. We are targeting to be at least 1% higher than what we were last year. And I think incrementally every year till 26, you will see this 1 to 1.5% increase.
Okay, that is the word coming in from L&T. Moving on, Whirlpool India fell by nearly 1% after reporting a disappointing set of numbers in the second quarter with a 7% fall in revenue on a year-on-year basis. Vaishta Unwala is here with the details. Vaishta.
Well, Whirlpool Q2 FY23 numbers were out today, and it does not look very appealing. The revenues were down 7% to 1489 crores, which is to be compared with the street estimates of 1747 crores. The EBITDA has come down by 45% on a year-on-year basis to 72 crores, and the margins have nosedived to 4.8% versus 8.1% in the same quarter of last year. This is to be compared with the estimated 6.2%. The PAT has also declined 47% on a year-on-year basis to 41 crores. So definitely doesn't look like a good set of numbers.
Okay, that is about Whirlpool. But Vaishta, Bharat Electronics gained over 1% in trade on the back of fresh brokerage calls. What are the analysts saying?
Well, for Bharat Electronics, the street is in fact quite happy with the numbers. The Q2 FY23 numbers were released in the past week, and the management has given some strong commentaries. The Q2 FY23 revenues growth is estimated at 15% and they are on track to achieve that. The lower band of the margin guidance has also been revised upwards from 21-23% to 22-23%, and in the long run they are expected to clock even as much as 24%. The order inflows shall comfortably be beyond the 20,000 crore mark. Also, Bharat Electronics has recently set up a new plant of lithium-ion cell and battery packs in Pune with a small investment of about 40-50 crores. Also, the announcement of the fourth positive defense indigenization list includes some 40 items which provides further revenue growth potential specifically for Bharat Electronics. Also, there are no delays in receiving any kind of payments from the government, which has led to a rise in the cash balance for this company as on 30th of September 2022. While the street is quite confident on the long-term prospects of this company, given its strong order book, the order pipeline, which is quite high, the recent MOU in hydrogen fuel cell, also there's a diversification in newer business verticals like hydrogen fuel cell, EV batteries, and there's a greater focus on the export markets. The company is expecting approximately $60 million of export revenues in the ongoing financial year. The company is also ramping up their non-defense businesses in e-mobility, in infra, in railways, in smart cities, etc. Now, in terms of brokerages, Phillip Capital has a buy rating on the stock with a target price of 122 rupees, while Jefferies also has a buy rating on the stock with a target price of 130 rupees.
Okay, that is about BEL. Time to focus on the auto sector now that has seen mixed sales in October. While Tata Motors, Escorts, Ashok Leyland see year-on-year growth, Bajaj Auto and Maruti Suzuki have seen a decline. Sonia Shenoy is here with the report card. Sonia, how do these numbers look to you?
Well, thanks a lot for that. So, it was a mixed bag this time around for the auto sector. And let me begin with Tata Motors. As you rightly pointed out, very good growth coming in for Tata Motors in the passenger vehicle segment, specifically because of the big boost that came into the electric vehicle space. So, overall, Tata Motors sales growth was 15.5% year-on-year, led by the passenger vehicle sales, which was a growth of 33%. And here's the big kicker for Tata Motors. The EV sales went up 158% year-on-year, coming in at 4,277 units. In fact, the entire commercial vehicle pack has also improved. So Ashok Leyland and Eicher reported good commercial vehicle sales this time. Ashok Leyland total sales were up 34% year-on-year. Eicher Motors domestic commercial vehicle piece rose 14.2% on a year-on-year basis. And the other big pocket that moved this time, which was very strong, was tractors. Both Escorts and M&M reported cracker sales this time around. Escorts total sales were up 7.2% year-on-year, up 18% month-on-month, while M&M recorded its highest ever tractor sales in a single month, more than 50,000 units. Now, on the weaker side, exports have been under pressure as we know it, and that reflected in Bajaj Auto's numbers. So the total sales were down 10% year-on-year at 3.95 lakh units. Exports for Bajaj Auto were down 31%, and the management said it would take a couple of more quarters before the exports return to normalcy. And the other set of numbers that disappointed the street was Maruti. The total sales were down 5% month-on-month, coming in at 1.67 lakh units versus 1.76 lakh units last month. The management said that the numbers are not comparable year-on-year because same time last year there was a huge supply side issue due to the semiconductor shortage. So Maruti and Bajaj Auto disappointed the street. But X of that, commercial vehicle space, premium side of the market as well as tractors did very well in this month. Back to you.
It will take probably another couple of quarters before normalcy starts to return. That's been our experience in the past when we've gone through these cycles. At a retail level, every month is better than the previous month. And that is very heartening because it indicates that the markets are digesting at least the price increase which is taking place because of inflation. Actually, our shipments are running behind retails. So I would say that there is every progressive month, exports should see a rise over the previous month. Retail story is a story of tale of two halves, actually, the upper half and the bottom half. And it's been a good festive, very robust festive, which has lifted the business. And the quality of the sales and the quality of growth for the industry and, of course, for Bajaj has been very good.
Okay, that's the word coming in from Bajaj Auto. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.